Hello, and welcome to the January 2021 update for MLFX, first of the year. We've been doing these for 7 months now, which is quite a feat in itself, and in all honesty, the amount of progress that's been made is gargantuan, ginormous, if we're using the big words. It's really good to see month after month that we're making consistent, steady progress, although sometimes not evident in the actual results. Just the quality of the system that we're building and all of the sort of pivotal, foundational changes and additions that we're making, it's all starting to add together, it's all starting to add up, and we're really starting to reap the benefits of it now. So in the next couple of months, we should hopefully be able to release a product that is really good. There's still a couple of things we still need to go through, which we'll cover in this video of the article. If you would prefer to read this article, I will put the links down in the description below, as well as a comment, so you can go over and read along to the article. But there's a couple of extra things I want to cover in this video as well that we're going to be working on this month, and some of the things that didn't quite make it onto the article that we've tested as well. But January was a huge month in terms of things done. So we've got the lightning round coming back again, just to get rid of a few of the less magnificent changes that we made. Just the smaller changes that didn't have as much of an impact. One of them was reducing the number of agent rules. So we've established that really having a larger number of rules increases the randomness of the agents, and we want to avoid randomness at all cost. Now that doesn't mean reducing complexity, right? There's two different things. So randomness we have no control over, obviously. Complexity we have control over. So there's a distinction there that we need to be clear on. By having multiple rules with the current configuration, we have no real control over the secondary, third, fourth, fifth rules. It's only really the first rule that we're able to control and that we use, or not necessarily the first rule in a sequential order, but there's only really one rule within that is what dictates if or if not that the agent sort of gets added to the agent pool. So it determines if it's a dominant agent or a beta agent, really. So with the current configuration, we can't determine that, which means that in a sense we are kind of left with tumors, to put it in that way, or left with little bits within the agent that we don't really want, and they're kind of just there along for the ride, and we don't really know if they're good or if they're bad. We don't know if they're benign or if they're, they're going to come back and cause issues at a later date. We just don't know. So by reducing the number of rules, we reduce the randomness, and we have more control over the agents that are actually getting added, more quality control. So at the moment we have a limit of 2 as the minimum we can get to, just through the way that the system has been designed through the architecture, but we will eventually go through a bit of a redesign and enable us to go to 1, with the idea that we have full control over an agent that has only 1 rule, and then what we can do is we can increase the complexity while not increasing the randomness by just merging agents together to create like coalitions or groups of agents or Uber agents or whatever you want to call. So that would just be a group of agents working together in consensus in a way. And we may not even need to create these not manually, but these sort of clusters. We could just go down the route of agent consensus, and it might sort of take care of itself. But there is possibilities for introducing complexity like that, as well as many other things that we'll cover in this article as well. So that's the first point there. Going in a little bit of a deep dive, especially on one of the things that's on the lightning round. So I'll quickly glide over the next couple of points. But we've added an activation threshold, and that in a sense is just saying that the rules we have set by the agent, which could be when the RSI is above 80, we want to sell because it's overbought, right? That could be one rule, and then there could be another rule that says when the 50 EMA is moving at this particular in this direction, or it interjects and crosses with the 100 EMA, then it is a good time to buy or sell, depending on which direction it's going. So what we're really doing here is we're saying at least this number of those rules, or the rules that we have, which is 5, in a sense that there's one rule for each input, right? So if we say there's 2 rules and we have 5 inputs, there is essentially 2 times 5 number of actual rules, right? Because each input has their own sort of sub rule associated with it. So out of those rules associated to one input, which is a pattern, it tests the market and it says, oh, this is a pattern, this is a head and shoulders pattern, and it creates 5 rules that dictate that pattern. If a high degree of those rules are activated, then that pattern is recognized, right? So we wanted to make sure that there was at least a threshold of those rules that had to be activated to a high degree in order for it to take the trade. And at the moment, I think we're using 50%, but we can increase that over time as we work towards it. But 50% is what we have at the moment, and that is working pretty well, but we can tweak that quite a lot as we go through. Next, we created a revalidate trades function. This is because we've had to do it a few times, and as you'll see further down the article, we did uncover a pretty bad bug in the trade validator that had to be fixed, and when it was remedied, we then revalidated the previous month of trades and got a significantly different outcome as we had reported earlier. So that was good because it was a much more positive outcome, and I'll talk about the bug a little bit further down, but yeah, it was pretty significant, and it was a good find. So we've now just got a revalidate trades function that we can call at any time, and instead of having to muck around for a couple of hours, it's done within a minute or so. We also updated the activator rules. I was talking about this, I think, in last month's update. So we're now using total return instead of the return at an individual data point. And I think using a return for an individual data point is sort of overfitting a little bit, because you're looking for almost like the local maximum, right? You're looking for the maximum for that one data point, and it's kind of the extremes. You're finding the most extreme agent that squeezed the final 1 pip, or it squeezed the absolute maximum number of pips that it possibly could at that data point. And I don't think that's a good way of doing things, because it may win at that particular data point, but you can guarantee it's going to be losing a lot of the other data points that it's trading. So overall, it might not be a great way of selecting which agents get added. So that's why we went to total return instead, which is, in a sense, it's just getting a more well-rounded agent that can do better throughout the entirety of the data set. And we can implement a multi-objective system again, which would effectively allow us to search for the best total return agent as well as the best local return or data point return agent, which is something we're considering. We already have that functionality implemented from previous, and there might be a need for it in the future, so that is a possibility. So the next thing we went into was really we were struggling with a bug to do with our selling agents. So our selling agents were causing us grief for a number of months. Well, me particularly, because I had an idea in my head and I couldn't shake it that there was something wrong with them. Just looking at thousands and thousands of agents, it didn't seem to add up. It didn't seem like there was that the selling agents were ever quite up to the quality of the buying agents. The buying agents always seem to look much better. There seem to be many more of them, and the creation of them seemed to just outweigh that of the selling agents. And initially I thought maybe there was a disparity in the number that were being tested. So maybe we were testing more buying agents than selling agents, and that was having an effect on the outcome, having an effect on the number of those agents that were getting added just through sheer brute force. But after looking into it, after adding some functionality to the agents log, which we had from a while ago, but we've now sort of implemented with some additions to help us with bug finding and bug fixing, we were able to rule that out. So as you can see at the top of this image here, there was you can see USD CNH, H1, which is the time frame. They're all H1, but this is for the bullish the bullish agent pool, and we had a total of 257 versus 289 agents tested out of the last like 500 or so that were bullish and then bearish. So you can see going down here, these numbers are all relatively even, which dispelled that argument very quickly. And after having a look at all of the agents, so this was displayed at the top of the agents log, and then what we do is we go down and we show every single agent that's evaluated with a couple of metrics to compare. So you can see the average revenue, trades won, trades lost, return being average and total, the risk reward, and the direction of that agent. So we could then scan down through this 5,000 agents displayed at once, scan through 5,000, have a look, see if there's anything that obviously screams foul play, and then we can address that. So it gives us a better sense of what direction to look at in the code. But the thing is, after doing this, we actually couldn't see anything wrong. We couldn't see anything obvious. So what we did is we progressed with what was going to be the final change before launching with not a suboptimal, but a different product, right? Getting some product out to market that we can use and that traders can use to assist them in making better decisions. So that last final change was actually to update or to start using and testing an activation threshold. And by doing this, we had far fewer agents get added, right? There was far fewer agents in the agent pool, and by having a much lower number of agents to look at, patterns became a little bit more obvious, and things became a bit more obvious as to there's some things going wrong here. So looking on the agents page, looking at the different metrics that are shown there, I could see immediately with the USD CNH agents that some of the average stop losses for them were far too small, right? They're 5 pips, 8 pips, 9 pips, and having the experience that I do of looking at the charts and looking at the average spreads and things, I knew that the average spread for the USD CNH never really falls below 10 pips, right? Even the minimum never really falls below 10 pips. So the fact that there was people or trades by these agents being taken that had a 5 pip stop loss just doesn't make sense, because that would always lose. You would take that trade and you would lose it immediately because the spread is greater than the stop loss. And obviously when you're buying and you're selling, you're using either the bid price or the ask price. The spread is just the difference between the two. So that was a big red flag that sort of made us look into that a little bit, and is why we started working on the stop losses here. So there was a major change in the relationship between the activation of an agent and the stop loss size. So previously it was sort of inverse. We were using the stop loss that is found during the creation of an agent. So first, it might help if I explain how an agent is created. So an agent is created when we have a creation data set and we test random points of that data set. So each data set could contain, let's say, 500 data points, and this is variable, so there's many different data points in different data sets, different lengths, etc. But let's say, for instance, there's 500. Each data point is 1 hour, so that's 500 hours. You're looking at a week of about 120 hours, right? 100 hours, what are we doing? 24 in a day, 5.5 days traded. I think it's around about 120 hours traded per week. So you're looking at roughly a month worth of data there. So we've got that data. It randomly tests one of those data points. It could be hour 24 or something. And then it uses the input functions that have been sent, or the indicators, which could be RSI, exponential moving average, simple moving average, etc. it randomly configures them. So, it sets up a configuration in terms of a simple moving average. That could be 100, simple moving average could be a 95, whatever. And then it takes a snapshot of that data point using those input functions, and it creates a rule around it saying like how activated was it at this particular snapshot. Then it merges all of those input function snapshots together, and that is the overall rule for that particular pattern that it's spotted. So it goes through that process, and then what it does is it tries using a look ahead function, which is basically where am I predicting to in the future, and we have it configured to look ahead 10 hours or 10 data points to see what's the maximum profit I can make. Then it sets the maximum as the take profit and the minimum being the stop loss. So how much do I have to risk in order to get that maximum? So we use that minimum. We always use that minimum, and it was previously set to be the minimum at 0% activation, and as the agent got more and more activated, it increased. So it was decreasing the stop loss as it got less activated, and increasing the stop loss up to the potential of the minimum as it got more activated. Which to me, immediately when I realized that was what was happening, was inverted, right? In my mind, that is not logical. We should be essentially, as we decrease activation, we are decreasing certainty, or we're becoming more uncertain. So the agent should then create a wider stop loss or a bigger stop loss, because it's not too sure what's going to happen. So you need to cast a wider net, right? So by doing that instead of what we were previously doing, we noticed an immediate improvement. We also have basically a fallback stop loss if it's ever less than 2 times the spread of that particular, like when it tests the market, then it automatically gets set to 2 times spread, the stop loss. So that's just to stop it from finding one particular trade where it only has to risk 1.5 pips, or risk the spread basically to win like 80 pips or something, right? So you would look at a 1 to 80 risk reward, something ridiculous, which it's completely luck orientated, and we don't want agents like that getting through it all. We always want to have a reasonable minimum that is actually feasible in the real markets, especially for someone who's trading as a human, right? And it's not fully automated through computer systems or anything like that. So those are a couple of things we did there, which were pretty critical when it comes to working through things. The final thing I'll mention, and I'll scroll a little bit down here just to the bug fixing that was sort of related to that, was what I was talking about just earlier, which was we uncovered an issue to do with the selling agents, and this was to do with the bid and ask price. So the buying agents were using the correct usage of the bid and ask when it comes to entering a trade and exiting a trade, and the selling agents weren't. So by fixing this, we essentially solved that problem, right? And you can see an image here. We were using the rate close bid as the close bid, and also the rate close ask was set. So this is a variable here, and it's getting set as a close bid, which obviously you can see it's been used twice here, when that should obviously be close ask. So that was actually a system-wide bug, and it had been in the system for a good 3 to 4 months. So it was really good to resolve that. And we saw an immediate, like everything just started looking as it should, right? Up until that point, things just weren't quite looking as they should. But beyond that, it just seemed to all make sense, which is really good. The next point I'll cover, and I'll go a little bit quicker over this one, was a per pattern activation instead of sort of a global mix and match activation for agents. So if you were listening earlier, I covered off how agents look at or test the creation data set and create rules around their patterns and things. So there's a little bit more of an explanation here, but I won't go into it again. just for the sake of not repeating myself. So what we were previously doing was actually we were basically testing the market to take a trade. So to create a signal, you'd test the live market, you'd get the information back. And then we were looking at the rules for that agent and saying, okay, are any of these rules activated? Regardless of if they were associated to the same pattern or not. So when we had something like 10 or 20 rules, essentially we've got 20 different patterns. So we've got something like, a shooting star, a hammer pattern, we've got head and shoulders pattern, we've got various different patterns that would all be related to either bullish or bearish momentum, but they would all be different individual patterns, and the system would then mix and match parts of each of those rules, right? Because each single pattern would contain a minimum of 5 sub-rules to create that pattern. So we could have a sub-rule from the first pattern, the fifth pattern, and the 8th pattern being the most activated, and it would take those and then it would spit out an output based on those, which was not ideal and not good practice, because again, that's complete randomness, right? We're not actually then finding profitable patterns. We're just throwing a bunch of rules into the pot and hoping that at random points when we test the market, those are going to be profitable. So complete chaos, completely wrong, and completely resolved now. So the way it happens now is we actually associate rules to a particular pattern, and we only take the most activated pattern rather than just the most activated combination of random rules, which makes much more sense. So yeah, there was a bit of an issue when we were doing that though, because the way the membership function was set up, which is what this is depicting here, we had basically activation up to a point and then it would drop off a cliff. So look at these lines here. Imagine that this is one of those inputs, but it has a bunch of different rules. So this could be an input for SMA, and this could be all of the different rules for SMA that we have set up. So at the moment, we've only got 2 rules, so there'd only be 2 of these lines for this particular input function. And one could be a configuration of... they'd all have the same configuration, but one could be tested and the rule could be activated to this particular level. Not explaining this very well, but each of these would be a different rule associated with a particular configuration of an input function. So the SMA, EMA, weighted moving average, those types of things. And these rules are slightly different and tell you to do slightly different things. So despite us having tested the exact same data point, they would be activated to different degrees. So what it would do is it would find at that data point which of these rules makes the most sense, and then that would be the one selected. But let's say this is like really close to being fully activated, but it goes slightly beyond. So it makes a lot of sense with the RSI when you're talking about if the RSI is at 77, then I want to sell. But what happens if the RSI goes to 78, right? It goes beyond fully activated and it drops off a cliff, and now it's not activated at all, which doesn't make sense at all. We still want to be, there still needs to be a little bit of room for sort of leeway there in terms of, well, as it's sort of activated at 65, it's still going to be, or as the RSI was at 65, it would still be relatively highly activated. So why then 1 point beyond is it not activated at all? And this was done for various reasons, one of them being mainly just performance. But the way that we needed to adapt is to just create a full membership function by basically creating the other the other side of the triangle. So we needed a full triangle to basically get the full effects of membership. And this was something. This was a bug, not a bug, but it was a flaw in the design that was accentuated due to the per pattern activation. Because when we implemented that, we were stuck with having very low activations on the agents, and because when we have a low activation, we have a low. It's not looking for much of a profit, right? And its stop loss is going to be huge. So it kind of fucked everything up. But then when we switched to this method, it sort of fixed everything. There's still something we can do there, but it's a quick fix and it works for now. Right, all of the points really that we implemented, talked about. Now let's talk about some of the results. I've got a nice graph here that I've been working at, and I say nice, although it doesn't really look very nice. What we're looking for here is we're looking for a line above the blue line above the black line. And what this is average return per 100 trades. So on average, if you take 100 trades, what percentage return should you expect? And this could be based on having $100 in your account, $1,000 in your account, whatever number, right? We're still just using the same metric. And at the moment, it's been very up and down. We've peaked out at 29%, but we've also gone down as low as recently negative 41%. So 41.6%. So there's a huge range there, and there's various reasons for this. Over the last couple of weeks, so sort of from 14 onto 17, we've been testing a bunch of things that have been very detrimental to the results, but we've also found a lot of bugs and issues and resolved them. So, we could look at these results here and see that, they look quite good, but they also might be false to a certain degree. So we can't guarantee that those results would have been that good had we have fixed all the bugs that we'd fixed at this point. We also now, for the first time ever, have an equal number as of, I think, week 17, so it's not reflective in these. But in these results here, we were only really having buying agents, and then I think for this week here, we only really had selling agents. So there's been there's not ever been a circumstance where the system has been performing as it should have, with the correct number of agents and everything in synergy, right? We've never had this in the entire 17-week period here, or 18 in fact, because 18 was not ideal either. But from about, I think, week 19, week 20, this should start trending up a little bit. We should get a lot more consistency out of the system because we've now fixed a lot of the issues that we were facing before. So as I said above, in December 2020, we rechecked the results after finding a validator bug, and these are just the rechecked results here. So it's actually quite significant. I think in this month or this week we had 100% previously, but it jumped up to 166, and this one jumped up from about 50% or something to 100% for the week. This was negative previously, now just positive. And so a good improvement there overall. And that was due to, what were we doing? We were setting the entry price. No, we were setting the entry time for the trade as the beginning of the candle time. So it would always be like 15. In terms of hours, it would be like 1501 seconds, right? Which is when the new candle, 1 hour candle, was created. That would always be where the validator started checking. And because the stop loss is always smaller than the take profit, generally, a lot of the time that stop loss would have already been hit immediately when it started checking the trade. Because if the trade was taken at 15:45 or 3:45 p.m., and then it starts checking that trade to see if it was a winner or loser at 3 p.m., there could be quite a lot of difference in the price. So if the stop loss is only 10 pips, you can pretty much guarantee in those previous 45 minutes there would have been more than a 10 pip movement within the price difference. So that's why a lot of the trades were showing up as false negatives when they should have actually been winners. So with the rechecking, that's why we saw quite a significant jump in terms of positive results versus negative results. Because I think out of all of the trades that I rechecked, there was probably only about 2 extra losers, and there would have been about 30 or so extra winners that we uncovered. So there was a big disparity there. Into the results for January. January was a pretty terrible month in terms of results. As I said, we were looking at a lot of different things that needed fixing. All of these results, we still had a disparity of selling and versus buying agents. So, there was that to consider. Also, we found a bug with the activator, which is pretty serious. We found a couple of other significant bugs that were good to get done, and we'll talk about them right now. So, already talked about the bid/ask bugs. Won't cover that again, but we had the algorithm crashing on update. This was also causing this issue down here, which is the deletion of all of our agents every time the server crashed, which was super annoying. We could import them from backup, but having to do that every single time is just a tedious task. So we figured out why the system was crashing, and that also resolved this at the same time. Although we figured out why the agents were getting deleted, and we sorted that as well. Activator had a bug where basically we weren't checking individual data points to the extent that we should have been. So the agents that were getting added, I'm not sure exactly how they were getting added, but they weren't meeting all the criteria that they should have. We weren't checking. I think the main issue was we weren't checking an individual data point to see if that agent made a profit, and if no other agent had traded that data point and made a profit, that should by default get added to the agent pool. So we basically weren't adding agents by default, and then I think we weren't comparing them appropriately either. So there was a couple of issues there. It was actually quite a challenging thing to overcome, but it's been resolved now. And as with the validator bug as well. So a bunch of positive things that we found there. So what is next? What are we doing in February, going on to March as well? Well, we're pretty close. Both Armory and I feel like we're very, very close to having a system that can profitably trade and can be a valuable assistant or a valuable tool to your live trading. So in a sense, we just need to go forth very cautiously. We need to not make too many significant changes to the algorithm that we can't identify which is positive, which is negative. So to do that, I think we need to implement quite a few bug fixing or quite a few, auditing tools that we can use to then identify which areas we need to look into, which areas we're lacking, and then make just a couple of small changes, and we should be good. So one of them that doesn't have any massive impact on performance in terms of return is increasing the speed by which we evaluate agents, right? So at the moment, we evaluate about 2.8 agents per second. So if we're evaluating for 100 seconds, that's about 280 for 1,000 data point data set. And this does not scale linearly, it's exponential. So if we had a 300 data point data set, we would be looking at about 4,000 agents, right? So it's quite significant in terms of how much it slows down as we increase the number of data points. So we need to find that sweet spot for data points, which is probably about 1,000, and then increase the amount of agents that are evaluated, hopefully to above 10 per second, so a factor of 3 at least. I think we can do this relatively easily. It seems like there should have been a major increase in our evaluations per second as we reduced the number of rules from 20 to 2, but there wasn't. There was a small, probably 1 to 2% increase in performance, but it should have been much greater. So there's something in there. There's some bottleneck that is stopping us from being able to evaluate at the speed that we should. It's just about identifying those crucial bottlenecks and resolving them. So that's something we're going to be working on in February. We will also possibly look at adding input functions or indicators this month. So despite the results that we're getting, we only actually have 4 indicators. We have the exponential moving average, we have the simple moving average, weighted moving average, and the RSI, or relative strength index. So we've only got 4, and 3 of them are moving averages. So we need some more diversity. We need to add some other oscillators. We need to add things like, average true range, I think would be good for identifying good stop losses. Something like pivot points or Fibonacci retracements for looking at take profits and things, figuring out where there's going to be support and resistance levels. So there's lots of different things we can add in here. So I reckon we add maybe 4 or so, probably 4 on the low end. 8 would be a bit of work, and I think we need to go incremental with this. So adding maybe 2 to 4 indicators, possibly even removing one of the moving averages, and we should then have a much more balanced number of leading/lagging indicators to choose from, which hopefully should have a drastic improvement on the system. The next thing is probably so what we really thought about is how can we improve performance. We do believe that there's a correlation between performance in terms of the number of agents evaluated and the performance of the system in terms of how much profit it's making. So by increasing the number of agents we evaluate, we therefore increase the number of agents that get tested against the agents in the data pool. We increase the number of agents that get added to the agent pool, and we should have better agents because it's working on an evolutionary kind of system, or it's working on a iterative local search where it's basically just trying to maximize total return, with a couple of other things in there. So we should have a much better overall performing data pool, agent pool, and yeah, it should work better. And that has proven to be true in the past, but our performance in terms of evaluations per second has slumped quite considerably. So we need to work on that, which is why removing unnecessary data points from the creation data set is a good idea, I think. And what I mean by that is, let's say that the maximum profit you can make at that data point is 100 pips, but the minimum you can risk to get it is 90. That's like a 1.1 risk reward or 1.15 risk reward, which is pretty bad. We want to avoid those creating agents with those kind of stats, because that would be the maximum risk reward that agent can have, and that's terrible, right? So by saying the minimum risk reward ratio for a data point to be tested and for an agent to be created based on that data point is 1 to 1.5, I think that's a good starting point. It would remove probably 20 to 30% of the data points that we are currently using to create and evaluate agents based on. And that's a significant number, right? If you're evaluating 100,000 agents, that's 20 to 30,000 agents that you don't have to bother looking at, because they just don't meet like the base level criteria. So there's 2 reasons we're doing that. One is for performance benefit in terms of evaluations per second. We want to make the most of the agents that we are evaluating. 2, also we have seen a bit of a slump in our average risk reward ratio. So we're sitting at around, I think, 1.9 at the moment, whereas previously we were sitting at about 3. So what that means is that we now need a higher accuracy overall to get the same result that we were previously getting. So previously, break-even for us was about 26%. Now break-even's about 32%, 33%. So that makes things, we're, in fact, maybe even higher, maybe about 35. Because I think we achieved 34% and we were slightly under, but that might have been about a 1.7 risk reward. So anyway, there's a significant improvement in accuracy that is needed to be achieved. We are hitting it in terms of we're getting close to break even, but if we can keep some of that accuracy and then also just in general increase the risk reward of average trades, we should get a better performing system. Another thing on top of that we can do is we can then limit the agent, because although that would be the maximum risk reward, 1.5 for a particular agent, as activation decreases, so say that agent is activated to 50%, right, and its maximum risk reward is 1.5. As that goes down in terms of activation, as it's not activated at 100% anymore, 90%, 80%, it's down to 50%, the stop loss is increasing, the take profit is decreasing. So we're getting narrower and narrower in terms of our risk reward, because obviously when we increase our stop loss, we decrease our risk reward. As we decrease our take profit, we decrease our risk reward. So both of them in unison are decreasing the risk reward. So it's going to exponentially get smaller until the point of it basically converging at the minimum, which is 1-to-1, right? We never have anything smaller than 1-to-1. It's always bigger. But what we can do is we can say to the agents, we don't want you to ever take a trade if it's smaller than 1-to-3 or 1-to-4. And that's another way that we can ensure that even though these agents were created for the data point that had a 1-to-5 risk reward, as that activation decreases, we are only taking a trade that has a 1-to-4 risk reward to basically stack it in our favor is what we're trying to do here. We're trying to stack the trades in our favor. You want to always have the odds in your favor. The next thing we're going to be doing, which is another sort of bug finding or area of interest finding, is plotting pairing trades. So think of the AUD USD, the USD JAPY, whatever. We are going to plot 1 month worth of trades, being the month that we're in. So if we're in February, plot all of February's trades on a chart, and then we can look at them side by side. We can look at areas of interest in terms of where do we make most of our profit, where do we lose the most. Is it in stagnant areas? Is it in trend changes, things like that? We need to identify the areas that it struggles and the areas it's doing well, so that we can accentuate and then remove if we need to for the opposites. The final point here, and just before I wrap up this video, is that we're going to be displaying the top N activated agents. By N you mean number, so top number of activated agents. The way we'll do this is we will probably do it for both buying and selling. So instead of just creating one signal, what we'll do is we'll create 2 signals, one for the buying signal, one for the selling signal, and then we will have under those the top 9 others, so it'll be 10 in total. We'll have the top one and then plus 9 buying or selling agents nested underneath those, so we can expand and contract the viewing of those, and that will give us an idea as to what areas we should look into for agent consensus. Should we use the average of all of those agents? Should we look at what is the cumulative activation of the buying versus selling agents? We could look at using some form of the mean or the median, right? Depending on what we're looking at there. We could use like a 80th percentile or 80th decile version. So there's lots that we could do there, and that just gives us something to start gathering data, something for me to start looking at every day, just checking, seeing how it is, seeing if there's any obvious correlations. And the idea there being that we will eventually use agent consensus to pick the direction of the trade at least, but possibly also using a combination of those top N agents to then create the output as well. So whether or not we just feed them all in together and we get a new output, or whether or not we used the mean or the median, as I said, of the output, cumulative outputs to generate like a new hybrid signal. There's plenty of possibilities there, and we do think that's the way to go. We do think consensus is a very good idea, but consensus tends to only work well when there is a large number of agents. So what we might need to do is we might need to integrate a multi-objective system again, which instead of us then being constrained to one agent per data point because of the activator, we're only adding one per data point, the best for each data point. We would essentially create a Pareto frontier of agents there where there's an infinite number of agents theoretically per data point, which we could then use something like agent consensus with. Because the issue there being, if you have an agent that's activated at 90% or 99%, and then the second most activated agent that we're using for this consensus is only activated 60%, because we've only got a couple of thousand agents, and there's not another one that recognizes a pattern here or a strong correlation from their rules to what's happening in the market, then it's going to get warped, right? Because one's going to be very certain, the other one's not going to be very certain at all, and it's going to drag down the average, and it probably won't be good. Well, that's what we've determined is sort of the factor between it working quite well and not working very well at all. So we'll look into that. There's plenty of time. We may end up, as I said, just releasing a product based on displaying the top N activated agents. So in a sense, we're not saying you should buy or sell right now. We're just giving you all of the different agents, what they're saying, and then it's up to you to look at the market and determine, okay, I think now it's a good time to buy or sell. But we would provide you with what the stop loss should be, what the take profit should be, depending on your decision as to which way you're going to go. And I think, in all honesty, I could trade using the system right now, and I could become, I could be profitable based off of that alone, because I've watched the charts enough to know generally which way the market is trending, which way it's going. And even if you were to just stick to the overall trend of the market, you should be profitable, right? Because at the moment, if our agents are always buying or always selling, generally they're actually more profitable than if we combine the buying and selling and it's just taking the most activated of the agents each time, because it's generally trying to counter trend trade a little bit too often. It's a little bit too up and down, and yes, if you just go in one direction, you're probably going to lose. But if you're going in one direction and that is the direction the overall trend is, generally you do pretty well. So what we need to do by displaying these top N activated agents is we need to find what is the maximum, what is the absolute maximum in terms of if the system was choosing its trades perfectly, what would it be making? And that is our bar, right? That is the ceiling, rather. Then we know how high we can potentially go. We can start looking for, okay, let's get about 80% of that and we should be good. So lots of room to improve, lots of things to do. At the moment, it's just about implementing a few of these systems that we can then get a better idea as to how it's working and looking under the hood a little bit more, so to speak. So that's us done for this month. Hope you enjoyed the video. If you did and you want to continue following along with this journey, please do like and subscribe to the channel if you haven't already. For those of you who are returning subscribers, thanks for following along. It's good to see that there is a few of you sort of coming in and interested in what we're doing. It's good to see that there is, general overall interest. It does fuel the fire a little bit in getting us to continue developing the system. You don't have to worry about us stopping, though. We're both very committed, and we're both through and through, in this to the end kind of thing. So we will continue doing that. But I do appreciate those of you who are sticking around, those of you who are sort of watching. Whether or not you're getting impatient by now or not, who knows? But it will be worth it, I can promise you that. So until next month, I might actually release a video or two later in the month just detailing some of the work that we're doing in terms of like beta release videos that I haven't done in a while. We should hopefully also start live trading again this month. So I want to do a couple of videos of trading and possibly one other update before next month's update. But if I don't, I shall see you in next month's update.